And I'm going to do a quick market update. I think this may be one of those times where everything is moving down into an intermediate, and I suspect this will also be a yearly cycle low for like all three asset classes: gold, stocks, oil, and the CRB. So I'll start with the stock market. It's pretty clear that it's in an intermediate degree decline. I put the 100-day exponential moving average in here for about the last year. This has been a pretty dependable support and resistance zone. You can see it acted as support on the way up, acted as resistance on the way down, again support. And today, the S&P finally joined the rest of the indexes and closed below the 100-day moving average. Let me zoom in just a bit. All right, so it's been my opinion that probably, put it this way, probably the plunge protection team, the government is trying to keep the market propped up. A trade deal, appears to be getting further and further away, not closer. Um, unless the Fed is prepared to start cutting rates immediately, then we're going to need, a signed trade deal for this market to turn up, or we're going to have to generate some extreme sentiment levels, and we're just kind of neutral right now. We haven't done any serious damage to where we could have some sentiment levels that are bearish enough that we could get a trend reversal. So um, I, I've noted this before. Intermediate declines usually unfold at least as three waves down. So we've got our A wave, we've got our B wave bounce, and we haven't actually broken below this to confirm that a C wave has started, a lower low. It hasn't actually been confirmed yet, but I have to think tomorrow or the next day it probably is going to be, and most of the other indexes have confirmed. So I suspect the S&P will as well. And losing this 100-day exponential moving average has made it significantly harder for the plunge protection team to keep this market propped up. I don't think they're going to be able to. I think we're going to continue down and get a real, true intermediate degree correction. Something that, at least bare minimum, at least retraces 38% of the previous rally. So let me put the fibs in here. All right, so, for me to consider this a true and completed intermediate cycle low, needs to at least retrace 38%. That's going to take the S&P down closer to 2,700. So we've got about 80 to 100 points to go yet before I would be satisfied that we've done enough to qualify as a real intermediate cycle low. Anything less than that, then I would have to assume that uh, the plunge protection team has aborted the ICL. Um, the next FOMC meeting isn't until the middle of June, so we've got an opportunity here this week and maybe next that maybe if we break this support here at 2,800, we could get our bloodbath phase. And I've gone over this before. They usually last 5 to 7 days. This is a period where a support zone gets broken, and then you start to get panic selling, and that panic selling can last, like I said, on average it lasts about 5 to 7 days. And then at that point, sentiment gets extremely bearish, and you just kind of run out of selling pressure, and that's typically the bottom of the ICL. So I think we're on the verge maybe of starting that. And like I said, breaking this 100-day, or at least closing below it, this 100-day exponential moving average is going to make it much, much more difficult to keep this market propped up, and I don't think they're going to be able to. I think we are going to get a full and true intermediate correction. At least comes to 38, and 50% retracement would be even healthier in my opinion. But I do believe that this is still just a sideways consolidation in an ongoing long-term secular bull market. All right, so I think, as you can see, this is how bull markets work. You get periods of strong trend, and then at some point, the market just has to go sideways and consolidate those gains for a while. We had one of those periods here. We had one from the top in 2011 till, about beginning of 2013. We actually really broke out of this sideways phase. We had a very strong trend into 2015, and then almost a 2-year period of going sideways. Another very strong trend after the elections, and we've been in another one of these sideways consolidations, and I think we're still in it. I think we're still going to be in it for maybe even the rest of the year, but we certainly need to at least complete an intermediate cycle low, and like I said, I'd like to see it at least come down to 2,700 would be a bare minimum. 2,600 would be even better in my opinion. All right, one of the confirmations of an intermediate cycle low, price will move below the 10-week moving average, usually stays below it long enough or goes deep enough to turn the 10-week moving average back down, at least marginally. We're on the verge of doing that this week already. If we can keep this up for another week or two, especially if we were to get down here to 2,700 or lower over the next 2 or 3 weeks, we're going to turn this 10-week moving average back down. That'll be just another confirmation that we're in an intermediate decline, which at this point I don't think there's any question we are. I just want to see it continue to completion. We need to erase the extreme bullish sentiment that was generated during this rally, and we're only about halfway there right now. So no need to try and pick a bottom tomorrow, or probably not even this week, maybe not for a couple weeks. Just be patient, let this play out. Let's see where this goes over the next couple weeks, and if we can get something that looks like a bloodbath phase, 5 to 7 days of absolute panic, that's when you want to start maybe trying to pick a bottom, but we don't have that yet. All right, we've got a similar situation unfolding in the energy market and oil. We've got our first leg down, the A wave down. We've got a bounce, and last week we closed below the 10-week moving average. It has flattened out. I suspect it will turn down. I think we're probably forming a little bear flag here in the oil market, and I would expect another move lower over the next 2 to 5 weeks. I don't think an unrealistic target would be for oil to come back down and tag this 200-week moving average. Sentiment in oil is also still far too bullish for me to try and call a bottom right here. I need to see sentiment become a lot more bearish, a lot more people on one side of the boat, so to speak, before I would want to try and lean against this correction. So I think we've probably got further to fall in oil as well. So again, no need to get off the sidelines in this market either. Just be patient. I think we've got more to go before it's going to be time to try and pick a bottom. And for gold, you can see here for the last 7 weeks, we've just been in a whipsaw event. 1 week down, next week up, next week down, back and forth, back and forth, back and forth, just taking money from bulls and bears both. I guess it's anybody's guess as to which way gold is going to break out of this whipsaw event that it's in. I kind of expect it's probably going to break lower. Silver made new lows today, and I think some of the miners, maybe the junior miners, did as well. So I kind of expect gold is probably going to break down out of this sideways chop. But sentiment is getting fairly bearish in the gold market. Maybe just a little bit more to go. And if we do get a quick week or two drop out of this consolidation, then sentiment would would register some bearish extremes, and then at that point, I think you could start looking for, some signs of a bottom, maybe a swing on the daily charts, or maybe a tag of this 200-week moving average in gold as well might be a potential spot to start trying to uh, get long the gold market. But for right now, there's just no indication one way or the other. We're just whipsawing back and forth, and both sides are losing money. And there's nothing as of today anyway to tell me definitively which way this is going to break. But I think it probably, I'm going to say the odds are about 60% that it's probably going to break lower. So that, the same thing applies. There's just no need to get off the sideline yet. If we get a clear indication that it's breaking to the upside, then you could, enter some long positions and get positioned for the next, intermediate rally like this. But um, or if we were to break down out of this sideways consolidation and come down to this 200-week moving average, then maybe you could try and pick a bottom. But right now, I think basically it's the same thing as all the markets. I think your best position right now is just to set in cash and wait for some sentiment extremes somewhere or some technical signal or signs that we've got a bottom or a turn in one of these markets. But it looks to me like everything wants to move down into its yearly cycle low together. So when it happens like this every once in a while, and when it does, it can create a lot of selling pressure, and it can infect all the markets. And I kind of suspect that's what's going to happen here in the next week or two.